I was just taking a list of the buckets that are starting to adopt at scale. We mentioned central banks, but payments companies, online brokers, asset managers. Are we going to look back at this early part of 2021 and say this was the year that institutions really got it?
I think so. And in fact, we might actually look at 2020 as the year that institutions really got into crypto, and 2021 as the year that they have announced that they've gone into crypto. Because announcements like Goldman coming back in a very meaningful way into crypto, announcements just as the one that was this week with Visa's partnership with Anchorage, they've been worked on for a long, long time. And so they are being announced now, but they've been in actual, progress for all of 2020. So 2020 has definitely been the year of institutions, and very different than the run-up in prices from 2017, which was primarily retail-led.
Right. So where do you think the biggest friction comes from here on out? A lot of people still point to price volatility making it difficult as a payments mechanism. There's the ESG element and the amount of electricity that you need, obviously. And then others sort of are beginning to worry about the taxable events that you create when you use it. I mean, of those, or maybe there's something else that you have in mind.
I think all of these have actually been surpassed. And there's always been, if we're talking about Bitcoin specifically, a narrative across time of the thing that is wrong with Bitcoin. And every single step of the way, that problem has been improved on. Technology has come up and solved it. And so it's not going to be different for any of this. 3 years ago, the problems were with lack of qualified custody. Now Anchorage is the first federally chartered crypto bank. 3 years ago, the problems were with liquidity. Now we have a very highly liquid market and many, many market makers that are in the US to provide this and internationally. So all of these problems are actually going to be surpassed. And let me remind you that crypto is not just Bitcoin. Bitcoin is something that corporates are taking a position in on their treasuries and on their balance sheets for capital preservation. But you're also seeing a massive increase in the use of stablecoins and interactions. Visa allowing crypto native settlements using USDC is such a big step forward for the crypto industry. And that is not related necessarily to Bitcoin.
Diego, some things haven't changed all that much, though, over the last few years, and that is crypto as a medium of exchange. It's still not widely used, although that could be changing. You had PayPal's announcement earlier this week, checkout with crypto, and I wonder, to go mainstream, does it need to be used as a medium of exchange as well? And, aren't they kind of at conflict with each other? If you think that Bitcoin or other cryptos are going to continue to go up, why would you want to use it in the first place? So does it have to be one or the other, or store of value or a medium of exchange?
Different cryptos have different use cases. And you're absolutely right that Bitcoin hasn't historically been used for medium of exchange because the price has been increasing. However, I think people shouldn't be thinking about crypto adoption as you being able to pay for a coffee shop or a coffee in San Francisco using Bitcoin. What's happening is not that. And I think you have to look at the PayPal announcement and the Visa announcement in a different light. What's actually happening on the ground is that you have wallets that have cryptocurrency. Whether they're stablecoins or Bitcoin, they have different types of cryptocurrencies. And the mechanism of acceptance is your PayPal account or your Visa credential. You are still tapping your Visa card on the Square terminal to pay for your coffee. And in the back end, there's going to be a conversion of the crypto balance into fiat. But the consumer is actually paying with crypto without knowing they're paying for crypto. So when we talk about mass crypto adoption, what's going to happen first is that it's going to be invisible. And it's going to replace the less efficient parts of the traditional finance system, such as the settlement legs, which is one of the things that Visa announced with a crypto native settlement. Removing the fiat from that portion of the leg means that the consumer can actually pay with their Visa credential and credit card or with their PayPal account without ever realizing that there's actually crypto conversion happening in the back end.
Shepard Smith here. Thanks for watching CNBC on YouTube.